Hey guys, welcome to the Pro Trader Network live training room. The purpose of this live training session is to demonstrate every week how I choose the pairs to trade to increase my probability of success in the markets. I'll also talk to you guys about how we examine the key trading psychology challenges faced by traders and attempt to provide techniques to overcome those challenges. If you have any additional questions during this, I'll do my best to answer them. Before we start this week's training, I have to legally warn you about trading. Forex has a high level of risk. The possibility exists that you can lose some or all of your initial investment, and therefore you should never trade with money you cannot afford to lose. If you are not aware of all the risks associated with Forex trading, you should seek the advice of an independent financial advisor. I strongly recommend trading a demo account until you achieve consistency and profitability. And of course, we're not making any promises, expressed or implied, that you will be successful in your trading endeavors. The information provided in this live room is for educational and training purposes only. All right, let's look at some charts. The preponderance of emails that I have received when I announced this class just in 3 days has to do with something very, very basic. And yet it continues to mystify a lot of traders. I just reran the series on the web about market structure. And we're going to delve a little bit into that because the question I receive overwhelmingly in the past few days is how to pick out sore thumb highs and lows. So we're going to take a look at a chart, and we're going to take a look at sore thumb highs and lows. Okay, when you're looking at a chart, let's say you trade the hourly chart in real time, and these are Fibonacci candles. And the reason I like Fibonacci candles for this discussion is there tends to be greater continuity within the trend when we look at the topic of sore thumb highs and lows, harmonics, and market structure. So we're going to use Fibonacci candles in this discussion. These are just the basic Fibonacci candles that come with the MetaTrader 4 platform. Okay, so here we go. It's pretty easy to see this is a new structure low. Why is this a new structure low? Because it took out all of the previous lows and kind of stands out on its own. Here's a swing low, 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 here's a swing low. 1,000 out of 1,000 traders that look at this chart cannot dispute that this is a swing low. How do I know that's a swing low? Well, by definition, this candle price was lower than either candle on its side. So it's this low is lower than this candle, and it's lower than this candle. And by definition, that is a swing low. How do I know that this is a swing high? Because the high of this candle is higher than each candle on either side of it. It is higher than this candle and higher than this candle. That is a swing high. Now, when I look at this chart, my eye naturally gravitates toward open space that is pierced by these highs, new structure highs and new structure lows. If I look to the left, there's nothing in the field of peripheral view here until this low. If I look right, there's nothing that stands out until this swing low. And that's why I have these boxes drawn on here, guys. This really helps me. Clearly, the low that occurred in this range is not as low as the low that appeared in this range. So I can look at this chart by virtue of just simply looking at these boxes and go, yeah, we're in an uptrend. How do I know that? Higher lows and higher highs, the definition of an uptrend. I'm reviewing all this stuff to tell you that, to get into the idea that if I look at these boxes, and if I didn't have them on my chart, What areas of this chart literally stand out? Well, it's going to be the areas that have very little price action on either side of them. And therefore, it sticks out like a sore thumb. So this would be a sore thumb low. Here we have a high, a new structure high that takes out all of these other highs and is floating around up here by itself. Look left, the next high occurs that's even close to this, occurs in these boxes and these boxes, but they're not as high as this. And in the context of current price, this sticks out like a sore thumb. So if I want to look at the retracement using a fib tool, I bring it from sore thumb low to sore thumb high. That's my lame attempt to draw some arrows. Okay. Where is that? I'm looking for that option. Oh, objects. Here it is. 0 pixels. Okay. So assuming that this price action has not occurred, if I want to use my fib tool to look at the possibility of a retrace in Confluence with my TDI, I'm overbought here, I'm looking for a cross down, a possible retrace, I would pull my fibs in from this low to this sore thumb high. Yeah, guys, this box that I have is an old indicator, and you guys can find all kinds of these on Forex Factory that are much better than this one. This happens to be one I'm familiar with, but it's way old school. It takes a lot of settings to deal with. But these boxes represent one trading day, 24 hours, actually about 23 hours. So this is the open and this is the close. You can tell this was a Sunday because this is a 1 hour chart. We have 3 hours and then the Tokyo market opens. So these boxes represent the high and the low of the trading day and the 23 hours worth of candles. That's what these boxes are. This indicator is called, let's go here. It's called the daily high-low. But it's old. You want to go to Forex Factory and get like something, I think they call them session indicators. You guys, many of you guys have, again, some that are much better than these. You can change the colors for each session. This is an old school indicator. But it helps me pick out highs and lows of the daily range. And you can simply look at these boxes and say, okay, look at this guy. The top of this box or this candle really has nothing else next to it at the time this candle is formed. And clearly, we have to agree that this is a new structure high. So if 1 million traders are looking at this, there's no disputing that this is a new structure high. Why? Because this high is higher than all of the previous highs in terms of the context of current price. Now we can look here and say this was a higher high, but will this influence price on a 1 hour chart? We would have to look at a higher time frame to see the significance of this previous high. If it's a resistance area that's been retested time and time again, etc. But for the most part, in the context of current price, if I'm trading a 1 hour chart looking for a potential reversal, depending on your rules and trade plan, I can say this is a new structure high. So if I'm pulling my fibs in, and of course we have the luxury of looking back on price that's actually occurred, if I pull my fibs in, I would pull them in from the range of this new structure low and new structure high that stick out like a sore thumb. And then I would look for the three, if I'm trading a typical counter trend trading system, I would look for my first profit target at the 382 and my second at the 618. And here again, after we determine the sore thumb highs and lows, we can see here a very nice harmonic move to the downside. Now we don't complete it to the 786, but 382 to the 618 all day long. And then what happens? Well, we don't have any more sore thumb lows and highs because, well, we do, but we don't have any more new structure highs. Why? Because this low does not take out this low, and this new structure low is where we begin our analysis. So we know this is just a retrace. This is our range. No high has taken out this high yet, and no low has taken out this low yet, so these are sore thumb. And now we look at this retrace. Look at on either side of this retrace in the context of current price action. Does this stick out like a sore thumb? One way to do this, guys, it's very easy, is just to zoom out. Which swing highs and lows, which swing highs and swing lows does your eye gravitate toward? Well, here, 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 in here a little bit, here, 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 here. That's how you begin your fib analysis. You've heard traders and me also say swing, sore thumb low to sore thumb high when we pull in our fibs. This stands out like a sore thumb, but there is a little bit of discretion involved here. Clearly this is a retrace, but this looks like it's a news candle. This seems to be an anomaly in the middle of this massive uptrend. And this was all about the euro on Friday. This started to retrace, and then after having a few cocktails, the guys in Europe decided that because Greece finally is going to take the relief from the European Union, that the euro needed to rally 300 pips. I wasn't trading on Friday, so let's go to a daily chart and let's zoom out. Okay, so notice the boxes do not appear on a daily chart because they're programmed to paint a box for 24 hours. So it would be very redundant to paint a box on every daily candle. But if you look here, where does price stand out? Here? Well, let me use a different notation here, guys. That's going to be all over the place. Let's go here. Here. And I've got one here. And I've got one here. And I've got this range in here. And I've got this swing high. And this low. Oops. And I've got this low. And I've got this high. And I've got this consolidation. I've got this consolidation, this swing high. So you can just see these key price points, KPPs, key price points, or KPLs, key price levels. And what do these represent? Can you guys tell me what support and resistance represent, just in a really simple definition? I'll tell you my definition. Anyone? Supply and demand, turning points, good, all good. Potential, I'll buy that. Let me give you a really simple definition. Support and resistance and swing lows and swing highs are just areas where you have to make a decision. This is a decision area. Is this price too low? So the majority of traders, which we know have a herd mentality and follow the institutional guys, we're all waiting here to make a decision to see what the herd is going to do. We don't know at the time, but what we do know is after we have these areas tested, here's a new structure low. And we know from our price action trading workshop and our experience that when a new structure low has occurred, we need to pay attention because one of three things is going to happen. We're either going to break below and close below this new structure low to create a new structure low. This structure low is going to be held off, and here we have two inside bars and we begin to rally, so price is held off. The decision of most of the traders in the market is that this price is low enough and they want to push price up. The third is that we'll retest this low to make doubly sure that this price is low enough, and then the market decides that yes, that price is low enough, we have a double bottom, we want the price to push up. So it's either going to retest it, it's either going to stop on a dime and reverse, break below and close below and create new structure, or it's going to stop on a dime and head straight back up and reverse. How do we know? We don't. We watch the following candles as the market decides if this is going to be the structural point or the decision point where the market reverses. So when you see these rallies, your job is not to sit and say, oh my God, I cannot believe that I wasn't trading on Friday and I saw the market, I missed a rally of, what is this? It's just ridiculous. 225 pips. What are you going to do? Plus it's on a Friday. Plus it's late in the New York session. Right here where we achieve this new structure high. We're overbought. We've created a new structure high. So what I watch when I miss these rallies is I watch these candles. And the minute I see the market pushing up, thrusting up like this, I start looking here. These are the moments of this is a decision, and when this candle retreats, the next candle, these are the decision candles after this new structure high. This is the pattern, or this is where I talk about micro candle patterns. Let's look at some traditional candles here, guys. So here we have a pin bar, right? Why is this a pin bar? Well, this bar is an inverted hammer that closes within the body of this bullish candle, and it's bearish. This is a reversal candle pattern. Then what happens? Well, we have a bullish candle, but it does not break the high of our pin bar. Then we have an engulfing bearish bar, and then the sell-off begins. So in this 3 hours, the market is deciding if it's going to continue to go bullish or continue to go bearish. But this is our first clue. That's why these candles are so important. This is our first clue. This is our first clue that this price is low enough and buyers are going to enter the market and push price up. Now they're going to be fighting with sellers. We're trying to reach an equilibrium here, and then all of a sudden buyers win out. We break above, we don't close above, but then we have this massive bullish candle where the buyers take over. Here we have this pattern, a morning star pattern. We have this bearish inverted hammer. Market is undecided. The range of price at the close is stuck between these two levels. And then we have a bullish candle, another bullish candle, and now the buyers start to take over. But our clue is here. Right at this sore thumb low. Notice price doesn't get any lower. Right here. Right here. You hear people talk about pin bars, hammers. These are points of decision and at the same time indecision. And that's an excellent point, Stoy. Thank you very much. You're ahead of me. I was actually going to get to that, but you're way ahead of me. And we look at our harmonics. Look at that pin bar and look at what happens. We'll get to this line I just drew in a second, but look at this. We have a massive thrust to the upside. We create a sore thumb high. At the time, we don't know this is a sore thumb high, but we know this is a new structure high. How do we know that? Because it's higher than all of these previous highs. And then the bears take over, man, and they just slam this thing to the downside. This may have even been a news candle. I don't recall. I know there was some stuff on Thursday. And then we have this sideways movement where nobody's in control of the market. There's true equilibrium here, and the sellers do not outnumber the buyers. And this is a tug of war. But look at what happens. Typically, when you see this, and then you see this sideways movement, we've talked about these patterns before. We continue to the downside, and we create a new structure low before the buyers get back in the market. And some of you said supply and demand. I call this is accumulation, distribution. Accumulation, distribution. There are a lot of names for it, okay? But the point is, that's why these candle patterns and sore thumb highs and lows are so important that you recognize, especially just new structure, because at the time, new structure still stands out like a sore thumb. And if you're using Fibonacci analysis in your trading, it is abundantly important that you can pick these out on a chart. And what Stoy is alluding to is here, based on our price action trading workshop, we have a harmonic completion, A to B, B to C, and C to D. Very good. That's good, Stoy. Nice call. Okay. Then we have areas. Oh, let's zoom out real quick. Can you see the sore thumb highs and lows on this chart? Sore thumb, sore thumb, sore thumb, sore thumb. These are all sore thumb lows, sore thumb high, sore thumb high, sore thumb low. Can you see those? Anyone? Yeah, okay, good. I just want to make sure you're awake. Now look at what we have here. And this is why we kind of walk away when we see consolidation, because the market is undecided. This is very, very interesting price action. And these pairs, the Euro New Zealand and the Pound New Zealand, as one of my fellow traders said, once these things move, they kick like a mule. They have a higher spread, but their ATR, this is 94 pips on a 4-hour chart. The daily chart lately, 200 pips. So one of the reasons traders don't like to trade these, and one of the reasons I don't like to trade them on behalf of my other clients, is because the drawdowns are pretty significant and people aren't accustomed to the size of the drawdowns that can occur, especially on the higher time frames. But let's look at this 4-hour chart first. So look at these candles. This massive reversal candle. Now, typically we would say that is an engulfing bar. Creates a new structure high, a sore thumb high. So if I was going to do my fib analysis, I would pull in shorter term. What do I mean shorter term? Well, this was my previous sore thumb low. So I'm interested in just this leg in the context of current price to see where this reversal might occur. And if I'm trading a 4-hour chart, perhaps I would use a pattern on a 1-hour chart for my entry to get a better price to sell off. In any event, here's that pattern again. Inverted hammer. Price rallies, and we just get a slam to the downside. Don't know why. This was a news candle. We would fully expect price after this emphatic thrust to the downside to continue, but look what happens. After that 4-hour period, it goes nowhere. Rallies all the way back to the top. Now, this double top that's created here, we retested this same price level 1, 2, 3, 4, 5 times within 10 pips, 5 times. This combined double top is our sore thumb high now, because we did not break above and close above these highs. So now, instead of looking at a single area that stands out like a sore thumb, we have a double top that creates our sore thumb high. Sorry guys, my mouse is messing up. We have a double top. Now, what usually happens after a double top? That's a reversal pattern, especially if we have bullish divergence, or excuse me, bearish divergence, which we do once this high forms. Price is level and our oscillator waves lower, bearish divergence. So we can look at this sore thumb area of a double top to say potential reversal. Look at our oscillator indicator. Is there divergence? Now I'm looking to be a seller if within my trading plan all of my other rules have confluence. But if I zoom out on this, get rid of these, and I'm just looking at this chart, you can clearly see how these stand out like sore thumbs. But when in consolidation, this is also a sore thumb high. This area clearly stands out like a sore thumb. Sore thumb low, sore thumb high. New structure. This happened, I believe, on Friday. Let's look at that. Yeah, and here we have, I'm showing you this price action, guys, to show you that nothing is 100%. And channels are difficult to trade, which is why most people just wait for a breakout. But you've got these massive candles. I mean, ATR of 7 means the average price, the average movement of a 1-hour candle is 95 pips. That's insane. Usually it's like 30, 40. So it's 3 times the average. Look at this massive engulfing bar here. Inverted hammer, we rally, we continue to the downside. We engulf, we go all the way up, create new structure, new sore thumb high. Why is that a sore thumb high? Well, we know it's a new structure high because it takes out all of these highs. Why is it a sore thumb high? Clearly, there's nothing on either side of it. It's like an historic sore thumb high. Then we have this inside bar, bearish, and I don't know where this is going to go at the open, but I will tell you this. This is a 4-hour chart I'm looking at. This is 4-hour chart. Oh, I'm sorry, I told you 1 hour. Yeah. The average is still much higher. I'm sorry, I misspoke. Yeah, I thought this was a 1 hour. You're absolutely right. Thank you for pointing that out. No, this is not railroad tracks. Railroad tracks are, why didn't that draw? Railroad tracks true railroad tracks are absolutely, well, why am I fighting that? Let's just do this. True railroad tracks are identical. Yeah, this year has been crazy. It's been absolutely crazy. And this Euro-Greek situation, guys, has got the market topsy-turvy. So this is not railroad tracks. This is not, it's really not even an inside bar because this low is lower than this previous low. This, I think this is called a shadow or something. Look at that, guys, in the documents folder down here. There's a candle reversal patterns PDF. Feel free to download that. There's some other docs in there if you want them. The candle reversal patterns. So make sure you download that. My point is simply is that if I'm looking at this chart, let's zoom out. What stands out? Sore thumb, sore thumb, sore thumb, sore thumb, sore thumb consolidation. But if I'm doing a fib analysis, I'm going to do it sore thumb low to sore thumb high. Sore thumb low to sore thumb high. Sore thumb high to sore thumb low. A little bit difficult, I will admit, to see sometimes on Fibonacci, but you can still clearly see at least an area where new structure was created. I mean, and these stand out like a sore thumb. I mean, clearly. And this is where you would begin your fib analysis right here on these sore thumb lows and sore thumb highs and swing lows and swing highs. And like Stoy pointed out, over here, we also had our harmonic move, our A to B, B to C, and C to D. Let's take a look at that. We had our fibs on here before, and we came down at the 618, and we know that a 618, oops, I'm going to do a little expansion. Change this real quick. These are the only two fib expansions I am concerned about. So I'm going to pull my fib expansion tool in here, traders, to this swing high and pull it down. Well, I thought I was. There we go. And I blow past the 127, but a 618 retracement has a tendency to complete at the 127 expansion. This is about the 141. So we've got a lot going on here. We've got a sore thumb low to sore thumb high to begin our analysis. We've got an ABCD harmonic completion, and we pulled our fibs in for fib confluence. Are you on a higher time frame, Stoy? Yeah. So what Stoy is saying is at this D level, if you look left on a higher time frame, look at, you've got all of this happening here. Previous, yeah. Is this what you're talking about, Stoy, over here on the 4 hour? We can look at the daily chart and see now here we have resistance. We have resistance here. So if you do your top-down analysis, this is our 1 hour. What's the N1? What's the N1? H1. Okay, 1 hour. Okay, you're looking over here, right? I just used my higher time frame. So I just put, do I have support and do I have structure at this high? So yes, I do. I have it right here. And then I have this resistance area that was retested. So is everybody, did I confuse everybody, or are you more clear on sore thumb highs and lows? If you follow our top-down analysis, you price tends to retest these key price levels. It's just, yeah, it's clear. Okay, good. I get this a lot. Oops. I actually get this a lot. How to draw fibs, how to pick out sore thumb lows and highs. So we've got and the market is making a bullish rotation here on the euro dollar. Which high low would I take from the daily if I was looking at this chart? Well, this is right here. This is my sore thumb high and low that hasn't been taken out. So let's do this. My analysis would be here. In the shorter term here, in the longer term, I would go here. So sore thumb high and low, long term. Why is that long term? Because this high and this low are the current structure highs and lows in context of this price. So we come down to the 618. We don't break above our previous structure, so this structure holds. This is still our new structure high. And I'm just looking at this daily chart. And now we're in consolidation mode from a daily chart. However, this range is significantly large. It's 600 pips. But clearly, the market is moving sideways because we have not taken out this low or this high. I'm looking for this to go up. Where would it go? If I do my analysis, I'm at the 618. The 618, as we know, tends to expand to the 127. And if I pull my harmonics in, now I would pull my harmonics. Come on, man. From the 618, and I've got some confluence at the 127. Do I have any structure there? Not much. I do have somewhat of a consolidation zone right there at the 117. 127, right. Why am I using this for my harmonic move? Well, because I've come down and I've touched a fib level. I'm looking at the context of current price. And this low has not been taken out yet. So my analysis begins here. I've made the retrace, which I'm looking for. This is B to C. And now I'm looking for price to continue to rally. That's how I would analyze this daily chart. Let's go to a 1 hour time frame and look at sore thumb highs and lows in current price. So this price encompasses what we looked at before, and that is 4 days worth of price action. Sore thumb low to sore thumb high. I'm going to really confuse you guys because I've been talking about A to B, B to C, C to D. But what we really have here, if you're looking at advanced pattern analysis, is X to A to B, B to C, C to D. So this is A to B, B to C, C to D, because this is X to A. This high still hasn't been taken out. So X to A A to B, B to C, C to D. Are you with me? For you advanced pattern traders, this is an ABCD completion. Is this an advanced pattern? I don't know, but it could be. I have to pull in all my fibs. Because this structure, we begin our advanced patterns with new structure high, X, to the structure low. Yeah, it's not yet completed. We don't know yet. We don't know where this high is going to end up. But we know that if there is a pattern potential here, we love to see an ABCD completion and then look for a reversal candle pattern to get short off the completion of that pattern. So you have to be able to look at new structure and sore thumb highs and lows to determine where you begin your analysis. If I'm looking for a harmonic move, I'm looking long term. I mean, this is 1, 2, 3, 10, 15 days, 12 days. So that's one aspect. Okay. If I'm looking for a shorter term price move in context, this is X to A. So we've got three things going on here. We've got X to A to B, B to C, C to D. Is this an advanced pattern? I don't know. You advanced pattern guys? I want you to notice not once have we looked at a CCI, an RSI, CCX, Stoke, MACD. We haven't looked at it. We're just looking at price. So let's assume this is an advanced pattern. Advanced pattern traders would look to get long at the completion of this pattern. And the market rallies. Now again, we have the benefit of looking back in time. But my point is, when you say that it's hard for you to determine sore thumb lows and highs, that is essential to your price action analysis. It's a skill that you must obtain. It's essential. And essential means you can't live without it. And in this particular case, you can't trade without it. So now let's look at this yet again. We've created an advanced pattern. We're making that assumption here that this harmonic move, not perfect, but close, this harmonic move that we labeled here. And if you've looked at the price action trading workshop, we have ABCD patterns within ABCD patterns. And now all of a sudden we've got X to A to B, B to C, C to D. But this X becomes an A to B, B to C, C to D harmonic move. And at D, if you're just trading pure harmonics, you would sell at D. But here we have yet again a new structure high. So short term. Why is this short term? Because I'm only using the last sore thumb low. Long term, my new structure low. Short term, sore thumb low to sore thumb high. Long term, structure and sore thumb low to structure and sore thumb high. Would I take the first cross down? Not necessarily. I like to see a more of an advance or more of a candle pattern. I like to see double top or 1, 2, 3 outside return or something like that to confirm the reversal. And what happens is, sorry, I'm talking into my coffee cup. That's where the TDI kind of can come in. If this is way overbought and I've got a pattern to confirming candle pattern, micro candle pattern, uh, hammer with an inside bar, etc., evening star, morning star, all those things I showed you on that traditional candle pattern chart. Get short. It's an aggressive trade, but depending on the time frame you trade, you can typically pull 30. I meant on the exact chart. Here, you mean this coming Monday or last Monday? This coming Monday? Last Monday, Friday, Thursday, Wednesday, Tuesday, Monday. Double top, short. Yeah, that's a decent setup. Does it meet my rules? Well, I like to see my TDI indicator way up here. Confirmation of the overbought. If I had no indicator on here, yeah, I would look to get short here. I would increase my probability by making sure that the TDI is up here. But if I had no TDI, this is my structure high, this is my structure low, right? X to A to B, B to C, C to D, no harmonic move. I don't close above, break above or close above. Market's held off at resistance. I would put a pending order somewhere in here to move down because I don't have confirmation of the overbought scenario in the TDI, nor is this price action telling me it's overbought. This double top is not enough for me to go short. For me, we have bearish divergence, but I'm dead neutral on my TDI. And look at how this thing just kind of floats, and it takes a day or so to commit to the downside. I like to see more harmonics with the TDI and the overbought confirming. A perfect setup to me. A perfect setup is a harmonic completion with a double top and bearish divergence. And this TDI at the extreme. That's about an 80%. This right here or this right here? First one or second one? Monday again. Here? No, I don't. This is not a setup for me because it retraces to the 786. I'm looking typically for the 618. When I blow through the 786, guys, oftentimes, the bounce off the 786 goes and retests the previous swing. This is not a confirmation for me. Yeah, it's well over 50%. This is not a strong downtrend at the time. For those of you that don't know, when we look at price action, our definition of a strong trend is when price retraces to the 50% level or less. So 50%, 382, 23. That tells us that we have a strong uptrend. In this particular case, we've got some news out of Europe that precludes that analysis. So that's why geopolitical situations are very, very important in the currency markets. I'm looking. Here is pretty close This is not a perfectly symmetrical double top. If you were going to take a picture of a counter trend divergence trade, this would be it. Market baseline well into the extreme. Sore thumb high. We have a shallow retrace here, but it's a 3 drives pattern. This is not perfect. This is but very nice. We have impulse, shallow retrace, impulse, shallow retrace, impulse, consolidation, retest, massive bearish divergence, market baseline well into the extreme. Way overbought. This is a very high probability setup. Oops. God. We come down and hesitate at the 618. So powerful is the bearish move here that we just continue to come all the way down to the 786. Then we have 1, 3, quadruple bottom, massive bullish divergence. This is not a perfect setup, but a good setup. Market baseline not quite to the extreme, but still a high probability trade. So this is what you guys need to look for. First thing you need to look for is when I get this kind of thrust up, this price action, counter trend. Where's the TDI? Additional confirmation of the overbought condition. Now we know this is overbought from our price action trading workshop because this is A to B, B to C, C to D. C to D far exceeds AB. So this is where we begin to look at the trend diffusing or weakening. And this is always what happens. We have a scenario where the market gets the most bullish before it reverses. Typically, the market thrust of a bullish trend or bearish trend is the most bullish before a reversal and the most bearish before a reversal. But we retest here 4 times and price gets rejected 4 times. Bigger right skew, absolutely. So for those of you that don't know, a skew is when A to B, the amount of candles that create B to C, right, gets taken out by fewer candles. So this one candle takes out all of this price action. One candle, and it takes 4 candles to create B to C and 1 candle to take it out. That's a right skew. Anyway, if you don't know what skewing is, I'm not going to get into that right now. So those are good. You want to just look at where, if you don't use the TDI, you should have some type of an oscillator on your chart, so that when you get into this scenario, you're confirming this overbought condition to increase the probability of a counter trend trade. But this is what I like to see. I like to see a retest, but I like to see this market baseline way up here in the extreme. That tells me that the trend is living on borrowed time. Okay? Do we all understand sore thumb highs and lows? Please tell me yes, no, say something. Okay. And again, another way to look is just to take your chart. Let me redo this here because I got all these notes on here. And just zoom out. I mean, this clearly stands out like a sore thumb. That stands out like a sore thumb. That does. That does. That does. Bam, 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 bam. Yeah, you got to know this. Where to begin? If you don't know it, where do you begin your analysis? You've got to have a starting point. But I think it's pretty cool that on this 4-hour chart, we can look at so many different time frames, and we've got we've got this potential advanced pattern from this X to A leg. We've got this advanced pattern from this X to A leg. And from this X to A leg. This is a new structure high, new structure height, and new structure low. And within that, we have a harmonic move. So you've got to always kind of be thinking, you've got to first be able to pick out new structure high, new structure low. Is it a sore thumb high or low? I mean, is there something significant going on there in the past? And we look left and we see this massive consolidation zone. So clearly that price area had significance because it got totally shut down. And guys, I'm not going to pretend here. You got to practice this. It takes time to be able, in real price action, when this thing is flying up here 200 pips, to go, what's happening? I mean, I can't get this every time. I mean, there's too much going on. And when it's happening across, depending on how many pairs in your portfolio, when it's happening across 9 or 10 pairs, you're not going to catch it all. So don't try. And focus on one pair that when you look at it, you completely comprehend and understand in a relaxed fashion what is happening so that you don't panic. All right, we've been going for just about an hour. Think about trades and pairs that you're looking at. Yeah, sore thumb high and low is the same thing as a sore thumb. It's exactly the same. It's sore thumb is a sore thumb. It sticks out like a sore thumb. Okay, we're going to take about a 5 or 10 minute break. No problem. I don't mind. Let's take a 5-10 minute break, and I'm going to refill my coffee and let's look at some charts that you guys are taking a look at for the open on Monday. Okay.